Today, Bitcoin falls as the S&P 500 and Nasdaq retreat from record highs. Gemini announces the crypto exchange is expanding to Australia. And in an exclusive interview, Zack Skelly, head of talent at Dragonfly, breaks down a new report on crypto compensation. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are in the red as of noon today, with Bitcoin dropping to the $121,000 level. Ether dropped nearly 3%, and Solana fell by about 1% to $219. Okay, let's talk about the top stories. Crypto exchange Gemini is expanding to Australia. The company announced yesterday that it had registered with the Australian Transaction Reports and Analysis Centre, rolled out Australian dollar banking rails, and appointed a lead to oversee the region. As part of the announcement, Gemini pointed to its Global State of Crypto report, which found that 22% of Australian residents own digital assets. Gemini says that's on par with the United States. And speaking of the U.S., Gemini went public here just about a month ago and has fallen about 19% since then. Next, the VC arm of banking giant Citi is investing in a stablecoin company. BVNK, a stablecoin infrastructure firm that's licensed in the U.S. as a money transmitter, told CNBC that it raised an undisclosed sum of money from Citi Ventures. The investment comes as big banks look to scale their footprint in the stablecoin space, which has seen growing adoption since the passage of the Genius Act back in July. BVNK's technology works as a payments rail to handle global transactions. Now, although the company didn't disclose the size of the investment, its co-founder said its valuation is higher than the $750 million disclosed in its last funding round. Feel free to check out the full story over at cnbc.com/cryptoworld. All right, turning to an exclusive interview for our main story. Digital asset venture capital firm Dragonfly is releasing its crypto compensation report this afternoon. I spoke with one of the authors of that new report, Zack Skelly, about the findings. Skelly, who is head of talent at Dragonfly, explains why crypto hiring this year has been cautious despite overall positive sentiment in the space. You spent months putting together this new crypto compensation report, noting that compensation is one of the most common topics you're asked about by the Dragonfly portfolio. The dataset includes responses from 85 crypto companies and now includes companies outside the Dragonfly portfolio. The data was collected late last year and in Q1 of this year, and some of the key findings include that crypto is hard to break into, with less than 10% of roles being entry level, and that most crypto firms were in growth mode but not hyper growth mode. We'll get into these findings in just a bit, but first, take us through why it was important for Dragonfly to put out this kind of report. What's the goal?
Yeah, it's a good question. So I think there's a ton of data that's out there on tech writ large, but there's some unique nuance when it comes to data around compensation in crypto, and reliable industry data is really quite scarce. So as a venture firm that's focused on crypto and that's very heavily research driven, we benchmark things like compensation numbers, so salary, equity, token numbers, given that many teams are actually compensating their employees using their own cryptocurrencies. As well as different hiring practices and metrics, like how long it may take to hire someone or the reasons that someone may decline an offer. And we equip our founders with this so that they're able to attract and retain the best talent. And then we publish the high-level trends in an effort to give back and hopefully keep the industry on the same page.
Overall, Dragonfly is calling crypto compensation in 2024 and early 2025 a down market, noting a drop in salary and token compensation across almost every level and region. What do you attribute this to, and what would it take to turn things around?
Yeah, that's a really good question. So I think it's important to note first that it's actually a very positive time for crypto overall. I think fundamentals are stronger than they've ever been. We have a favorable administration. We've seen token prices at all-time highs this year, like Bitcoin and Ethereum. But with that said, I do think 2024 was a little bit of a different environment from an administrative perspective. And this sector also reacts to macro just like any other sector. So we really saw this downturn becoming most prominent, I think, around February when the tariffs hit this year. There was a massive cut in open jobs, and ultimately it resulted in hiring being net negative in the first half of the year. We are starting to see a little bit of a recovery in the second half. I was actually just digging into some of the data that's not quite public yet, which we'll be releasing soon before this call. So we're seeing it turn around. But overall positive environment. I think hiring has been cautious in light of broader macro in general.
Yeah, and expanding on that, the report found that despite bullish blue chip token prices, a favorable U.S. administration to crypto, as you noted, and overall positive sentiment, crypto hiring this year has been cautious. Early swings included strong January job growth, a February tariff shock, of course, and then job cuts in March, which left net hiring negative through the first half of this year. As we noted earlier, this research was conducted through Q1 of this year, but over the summer, we saw major regulatory advancements for crypto here in the U.S., with the first major piece of crypto legislation, the Genius Act stablecoin bill, becoming law, and progress for market structure on Capitol Hill. How is that playing into U.S. hiring now? Do you think we'll see a shift due to these developments?
I do feel like, I guess I think about this in two ways. So for one, it's the job market, like total jobs, added jobs, and then secondarily, there's the compensation element. And I think the compensation element often lags the job market. So we did see this dip that you just discussed, and compensation, I think the numbers kind of followed. I expect that they may continue to follow for a little bit of time to come. There's usually a little bit of a delay. But to your point, and again, digging into some of the more recent numbers, we are actually starting to see a little bit of a recovery in the second half of the year. In our data specifically, the biggest spike started to occur in August, and we're going to be revisiting this as we do a little bit of a deeper analysis at year end. I thought this was particularly interesting in light of some of the reports that are coming out now with the federal shutdown, like a lot of the private job reports and things. But crypto, again, does seem to be recovering as far as we can tell so far. Interestingly, we see a spike every Q3. So we look at this year over year, and historically Q3, we've always seen a bunch of added jobs. We also generally see a little bit of a seasonal slowdown at the end of the year with the holidays. So I anticipate that that may happen again. But I think the base case right now is overall favorable.
So the question everyone wants to know, how much money can you make working in the crypto field? Well, your compensation report breaks down average salaries for roles including software engineering, crypto engineering, design marketing, and product management, to name a few. Your report found that the average salary for all the roles was $144,000 a year, an 18% drop compared to the year before. If you include equity and tokens, the total compensation average was $263,000 a year. Did these figures surprise you at all?
They don't surprise me too much, but I do think it's important to note that the total compensation figures were based on what was reported at the time. So there's a lot of greenfield opportunity within crypto. Token compensation has some unique dynamics to it. And I think there's potentially a lot of upside potential. So although people might have been quoting that figure, if they were to get in on a token-based project, higher likelihood that they would have liquidity, I would argue, than what might come from equity in most cases. And again, I think a lot of the value is really in the upside and the fact that this industry is on a pretty rapid trajectory in terms of how quickly the technology is advancing.
Now, your report found that Europe became the dominant international hub. Of course, back in April of 2023, EU lawmakers approved the world's first comprehensive framework for crypto regulation. Do you think that had anything to do with it?
I think that's quite possible, yeah. I look at that in conjunction with what was happening within the US. And yeah, we were surprised at a couple of the trends there. Western Europe in particular became the dominant international hub. Eastern Europe followed pretty closely behind. We also saw pretty explosive growth within Asia. I think Asia hiring doubled year over year from the last time that we had done this report, from about 20% of companies to about 40% of companies hiring within Asia. So we're seeing some really interesting dynamics and shifts between the US and different countries around the world where people are hiring. But it is a very, very global industry. It has been since day one, and also very remote dominant. So there's a lot of flexibility in terms of where people are able to be employed.
Your report also notes that for the first time, international engineering executives out-earned U.S. engineering executives. What do you attribute that to?
I think it's just in an effort to stay competitive, really. As noted, in 2024, we saw pretty explosive growth internationally. Looking at some of the more recent numbers, we're actually starting to see U.S. jobs within our portfolio continue to come back. So they're resurging a little bit. And I'm very curious what this is going to be looking like towards the end of the year and when we do this next report. But it's a very competitive market at the highest levels for talent. As you mentioned earlier, really only about 10% of jobs were entry level in the space. So it tends to skew pretty senior. And at those levels, I think teams are doing what they have to do to attract who they believe is kind of top talent.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.